Welcome to the Advanced Gap course taught by Gap Edge Trading. This is advanced tactics on day trading gaps, and this is built upon the foundation of supply and demand taught in the core course at Gap Edge Trading on gap trading. So this takes it to another level. There's a disclaimer to read over. Please read over this disclaimer. Here is the index of the chapters we're going to be going over. Chapter 1, Filters for Gapless. Chapter 2, Gap Edge Trading Method. Chapter 3, Why Higher Time Frames. Chapter 4, Candlesticks. Chapter 5, Supply and Demand with Gap. Chapter 6, the Gap Direction. Chapter 7, the Setup. Chapter 8, Failed Moves. Chapter 9, Measuring Gaps with the Market. Alright, Chapter 1, Filters for Gapless. This is a chapter I'm going to teach you how to set filters and how to find the best gaps, because there's a lot of noise out there. If you're new to gap trading or if you've had some success with gap trading, you got to begin to build and find out which ones are the best ones to watch, and these filters will keep you on the right track. First thing in the morning before the market open, create a watch list, okay? So you got on the left we have the gainers from the day. On the right we have the movers down for the day, pre-market. Okay, so my trading platform has gainers, has gap downs, has gap ups. Either way, any gainer before the market opens is going to be a gap up, or any percentage loser on the downside is going to be a gap down at the open. So I would recommend starting there as your first place. Begin to take the symbols from the filters you get through your broker for gainers and loser percentages pre-market. Then you'll find some great gap ups and great gap downs in there with adding some of these filters in there. So when scanning for gaps in the pre-market, focus on stocks that have most volume, typically over 50,000, and the more volume the better. Typically during earnings season you're going to have a plethora of gap ups and downs. In the peak season they have a lot of volume, but during the time of slow time in between earnings season, you're going to have less gapping stocks because there's less news coming out in earnings. Also, earnings seasons focus on stocks that have gapped up in earnings. So I recommend finding stocks that gap up on volume. Also create a list for earnings ones that gap up in the pre or post market, and these tend to trend all day up or down. These are a gold mine of stocks to day trade. These or stocks that have big news that would affect the bottom line. So you want to pay attention to stocks that have earnings, stocks that have news driven. All gaps are in response to some earnings event, news event, upgrade, downgrade, good news, bad news, speculation. News drives the stock up or down. It's energy, and the volume is a response of selling and buying because of the news. So remember that if you have a stock that's gapping up, let's say $2, and it only has traded 500 shares in the pre-market, that's an indication it's probably not going to open on the gap. So, but if you have a stock that's gapping $3 down and it's traded 500,000 shares, 500,000 shares in the pre-market, that's a very good sign that there's a lot of people that are exiting this stock because of the news is probably negative, or their earnings forecast is down, or they've been downgraded, or they have some kind of negative report about the company. So this stock has a lot of energy on the downside. You want to focus on maybe shorting, looking for opportunities to get short this stock at the open or intraday throughout the day. So pay attention to the news, pay attention to the volume, pay attention to, and I'm going to go over some of these reasons why through this chapter. So here we got an example of AIR, the New York Stock Exchange traded stock, reports quarterly earnings of 52 cents per share. This is 18% increase over earnings of 44 cents per share for the same period last year. So obviously the company reported $473 million in sales in this quarter, But the red part here is this is a 3.82% decrease of sales of 492.3 million the same period last year. So it's negative. So the news is negative about their earnings. And so what happens at the stock in the pre-market? It's gapping below $46, and you can see that it opens into the lower portions, higher portions of 45, and ends up selling down into 42. So there was an opportunity here, maybe at the open, and we're going to go ahead and review this trade later on in the seminar. But AIR's pre-market volume was over 280,000, which is its average daily volume. So it already hit in the pre-market its average daily volume. So that's a good sign that this is a stock in play, and by paying attention to the volume in the pre-market, the news-driven event, read the news, know what the news is saying, because it also, when you see it in the future, it'll build a confidence and an edge in taking trades with this type of setups. Another example here, Starbucks, SBUX, NASDAQ stock, said it plans to close 150 U.S. stores due to an increased competition. Shares fell 4% in the pre-market, as some analysts cut their price targets at the announcement. After the announcement, the company's same-store growth estimate of 1% also seems to disappoint some investors, as it was below the street's estimate. Okay, so this was the news that came out in the pre-market. The stock opened below $55 and broke below support, and the pre-market volume was over 600,000 shares to trade it. Now normally the stock does about 7.7 million shares, so you have almost a 10% in volume in the pre-market of its normally daily average volume. So number one, we know that the stock has reported the negative news in regards to they're closing 150 stores, so it's negative. The street's not liking it, so people are bailing the stock on the pre-market. And two, there's 600,000 shares traded in the pre-market. Starbucks was cutting stores, downgraded for analysts, created a selling pressure for 2 days. Actually, you can even see even 3 days down. So this was an opportunity. I'll show you later on in the seminar of what you could trade this one in. So I'm just teaching you right now how to build the filters, how to find the stocks in play. Alright, here we got Darden, DRI, reported upbeat earnings for the fourth quarter. Now Darden's DRI's pre-market volume was 500,000. Now normally does about 1.6 million, so we already have done 33% of its daily volume in the pre-market. Darden rose on a breakout volume on upbeat earnings, news-driven gap up. So it had huge play. So it closed the day before around $94 and change, maybe 93 plus, 93.75 or something like that. Gapped all the way up to 100, and you think that would be something you want to short, but absolutely not. You want to find something to enter this one on the long side, but these filters are showing you the pre-market volume, the news-driven event is creating an opportunity. So use these filters. Pay attention to the news of the stock. Pay attention to the volume in the pre-market. These are early clues that you want to trade these stocks throughout the day as gaps. Now we have Oracle. Oracle reported better than expected earnings for its fourth quarter, but issued weak guidance for the first quarter. So the street didn't like it. So in the pre-market, Oracle was traded over 1 million shares. Oracle the gap down was fueled by weak guidance, so their forward guidance was weak. It closed the day before at 46, opened below 45, and traded down into 42. So another indication of the news-driven event. The volume that was in agreement with the event creates an opportunity to maybe possibly get on the short side of this stock throughout the day. Alright, here we have RHT, Red Hat. Okay, let's read the news. Shares of Red Hat Incorporated were down 12% to $145.52. Red Hat reported better than expected results for its first quarter, but issued downbeat Q2 and fiscal year 2019 guidance. The company announced a $1 billion buyback. So they're sucking up the shares. But so what happened to the stock? It closed at 165 the previous day. When the news came out in the pre-market, it traded over 400,000 shares, So Red Hat was a gap down, closed lower on downbeat Q2 and guidance, and there was enormous opportunities. We actually traded this one, and on the downside, so it was a beautiful setup. So it went like a $9 range throughout the intraday trading session. So it was a very nice setup. So again, pay attention to the news. 2, followed by the increase in volume in the pre-market, which gives you a clue that there's an enormous activity going on there. And you can see even in the day, it did over 14 million shares. It only does 2.6 million shares. CarMax, KMX reported quarterly earnings of $1.33 per share, with beat the analysts' consensus estimate of 1.24 by 7.26%. This is a 17.7% increase over earnings of $1.13 per share for the same period last year. The company reported quarterly sales of $4.7 billion, which beat the analyst concession estimate of $4.59 billion by 4.42%. This is a 5.53% increase overall sales of $4.542 billion the same period last year. So here we got again a stock that trades 1.9 million. Stock now trades in the pre-market 350,000, excuse me, and closed the previous day before in about 71, opened at 76 and traded up into 80. Another way, pay attention to the news. Upbeat, a good amount of volume in the pre-market. It did over 12 million shares on this day that it gapped up. PriceSmart, PSYMT was down, falling around 10% to 84.55. PriceSmart reported weaker than expected earnings for its third quarter, which sales exceeded estimates. So here we go, another one with negative news right in the alley here, and it gapped down below $90 and closed the previous day at 93 plus and traded down into 982. So another stock that gave enormous opportunity for a nice day trading event to the downside based upon negative news and in their earnings expectations for the next year. So what I got showing here is what I do on my platform, and I want to mentor and trade traders how to find and what to watch. So I have 4 monitors dedicated to watching 12 different stocks, and each chart's linked to each monitor. So if I change the symbol, let's say in the top left corner VXX, all the other monitors will change the same symbol because they're linked. Each chart is linked to the same symbol, so I don't have to enter in 4 different symbols and 4 different monitors. I enter it one time and it changes and populates throughout. So I pick the best 12 at the open, so I can watch 12 of them. And so what I do is I put them on like a 5-minute chart on one monitor for 12, and then a 15-minute time frame for the next monitor, and then a 30-minute for the next one, and then a 60-minute for the next one. That way I can keep my eye on all different time frames, not to change back and forth, and I can just take a quick glance because I have 8 monitors. So this is a business you're into. I recommend getting some extra monitors and paying up for that, because the more visual, this is a visual game, this is a visual job, and you have to see what's going on. And I would pick the best 12 based upon the criteria of pre-market volume, the nature of the gap, and we'll go over with that more in detail as we go forward here. So, how to find the best gapping stocks to day trade. Number 1, you go from the earnings list. You start from the earnings list, and I always keep a record of all earnings stocks in the post and pre-market, because that's the very first place I go for gaps. Because most stocks that are gapping from earnings, gapping up, gapping down. And if they're not gapping, then there's nothing going on. No one's shocked by the surprise of any negative or positive news. And secondly, I also have a scan that my platform does called Rapid Scan, Rapid Rise, and Fall Scan. And basically those are things I'm watching at the open, because some stocks don't gap in the pre-market and they may be gapping right at the open, and I want to see who's moving fast down and moving fast up. And thirdly, net percentage change from the open scan. So basically I'm having my gap list already made, and then I have a column for net percentage change from, I want to see which stocks change the most from the price from the upside or the downside. So let's say it opens at 13, and in the first 5 minutes move from 13 to 16, that would probably be the highest percentage change from the open scan up. Okay, and then fourthly, I want to breakout volume scan. I want to find stocks that are making breakout volume. That means they're having 3 times, 4 times, 5 times the amount of volume that it normally does throughout the day, and even from the open. That shows you there's a lot of activity. People either leaving or selling, or people getting in and buying it up. Okay, so these 4 criteria will get you into the focus group of the best gaps to trade. Okay. And here's what I use. I use earnings list. I use briefing.com. It's free, and that's where I get my list from. I copy it and paste it into an Excel spreadsheet, and then I copy the column of the symbol page into my broker, and then I have a whole page for earnings. And that way, if something doesn't gap at the open or gap at the if they do gap at the open and they didn't make the list, that I know which ones to keep an eye on, and I know that I basically want to know what's moving out there. So this gives me opportunity to find ones that could potentially be moving from a gap up or gap down based upon earnings. And here is a rapid rise and rapid fall scan. This is a scan I use while the market is open, showing me which stocks are moving the most, either rising or falling the fastest. This is a good clue to you to have a potential gap that didn't make your list or some news-driven event. So this one is showing you COHR is down 5%. $5, but it's rising rapidly on the 1 minute. It's probably reversing off a sell-off or a gap down. And Apple is also, it's not, you can see it's 0.20, so it's not that great. But this is a great tool to use, and I use it effectively. It's one of the tools I use in my toolbox for finding good plays with gaps. And then I sort here. I keep 2 lists on my platform, one for the S&P 500 and one for the NASDAQ 100. I sort by net percentage change from the open, and I also keep one for exclusively for the gap list. This will show you some of the biggest movers on the S&P 500 and NASDAQ 100 by net percentage change from the open. That means they've changed the most from the open, right? So if they opened at $5 and they're right now at 10, that means they've doubled. They probably would be up 100%. All right, so these ones up 5%. And we also use a volume breakout scan. These typically are some of the biggest movers and gaps in the day. So I usually sort through this one. As you can see, some of them have some low volume. The others just kind of sort it. I copy and paste it into a minder. I sort by volume, kick out the ones that have the very low volume and the ones that are low price, 50 cents, $1. I want something over $5, $10 to trade it, all right? So pay attention to the volume breakout scan.